Consumer cyclicals have lagged in 2025, but can they make a comeback? This is Sectors Up Close, and we're talking consumer cyclicals. In a strong year for Wall Street, companies that rely on Americans' willingness to shop have dragged behind as consumers struggle with rising prices and a cooling labour market. The S&P consumer discretionary sector has risen just 8.2% on the year, half the gains of the wider index. Kristina Hooper is Chief Market Strategist at Man Group. Kristina, do you see consumers regaining confidence in the new year?
So I don't think they will, and I think it will largely be driven by an increase in unemployment. We've seen a somewhat concerning trend in terms of job growth in 2025, or the lack thereof. And it was very stark to hear from Chair Powell in his December FOMC press conference when he talked about how he thinks the BLS numbers are actually overstating payrolls by about 60,000 a month, which would mean on average job losses of about 20,000 since April per month. So this is not a trend that engenders confidence in consumers if it continues in 2026. And I would anticipate it does, and in fact, likely accelerates.
I was struck, Kristina, that in your notes you predicted a recession. What makes you say that?
So it's that combination of an increase in unemployment. We've already heard a number of companies announce layoffs that haven't yet occurred. I think the expectation is that we'll see more as companies realize or expect that they will realize productivity gains. We've already seen this happening with entry-level workers, those who've graduated from college. Their unemployment rates are much higher than they have been historically. Very concerning, actually, for the class of 2025 that graduated just a few months ago. So many have not been able to find jobs. And it suggests that potential for a trend. Right now, AI means less need for entry-level workers. It could soon mean less need for mid-level workers, and so on and so on. So I think there's a real risk to white-collar workers. And what we've seen is that it's the affluent, higher income consumer that has been driving consumer spending thus far. So if we see some vulnerability there, so it's those higher paid professional workers that are losing their jobs, that could really undermine where we've seen strength in consumer spending.
There has been a lot of talk this year about the K-shaped economy. According to that theory, of course, as you said, the high-end consumer and companies serving them will do just fine. But how much do you think that might change in 2026?
Well, I certainly think the two vulnerabilities for that upper leg of the K are going to be number one, the job losses, if we see a lot of white collar, higher end job losses. And number two, if we were to see some sort of a stock market downturn. There hasn't been much sensitivity historically between high income consumers and inflation. That's really impacted middle and lower income consumers. But where there is sensitivity is stock market prices. Now, thus far, that's been an advantage. It's been a positive. It's helped fuel consumer spending. But if we were to see some sort of a downdraft in the stock market, that could easily really reverse a lot of the consumer confidence in that space and the consumer spending among high-income consumers.
Where do you think there might be bright spots then, particularly in those consumer-facing firms in the year ahead? Do investors have to be very careful in their stock picking?
I think it's absolutely a story about stock picking. For example, there are some unusual trends occurring. For example, we've heard a lot of companies in the consumer cyclical space talk about how consumers have moved downstream. So it might surprise that some of the high-end companies may not be doing as well because they're losing high-end consumers who've moved downstream. That trend could easily continue. So I think it's very important to be paying attention to what companies are saying on the earnings calls, what they're doing. Those companies, especially in the restaurant space, that are focused on value strategies, the low price menu items, that's going to draw customers in an environment in which we're seeing a downturn in the economy. So I think it's very much about specific strategies that companies are employing. This is a story about active management and stock picking.
That was Kristina Hooper of Man Group. Don't forget, you can watch more videos on Reuters.com.